Hello, this is Brian Rezny, president of Rezny Wealth Management, bringing you an important update about the economy and the investment markets. Well, we're firmly into the fourth quarter of this year. Of course, the election is right around the corner. One of the things I want to stress to every client, don't be nervous. Just make sure you get out there and vote. Either way, the U.S. is going to prosper. Under some policies, it'll prosper a little greater, but under either president, the economy is going to prosper. What we're looking at ultimately is really where we're going to be invested differently, if at all, after the election. So rest assured, if we need to make adjustments to portfolios because one president or one party gets in versus the other party, we're going to do what we're going to need to do. And as I've repeatedly tried to educate over the last 4 or 5 months on the political scene and the presidential election coming up, again, the economy grows under Democrats and Republicans. Policies do matter, and if you do have better policies, the economy will grow a little bit better. But remember, we're going to keep growing ultimately. Under a Democratic control, we're going to have slightly different measures within the portfolio. We're going to make some subtle changes. As an example, which clients have asked me, what would you kind of look at doing if a Democrat was elected? Simple. They like to spend money more on infrastructure type projects more than they do on the military. So in reality, we would probably not be looking at the military sector as a whole. We'd be looking at more of infrastructure stocks, building type stocks, heavy equipment, things of that nature, as a bigger sector weighting as a way to look at it. If Donald Trump is reelected, of course, what we currently have right now, we're probably going to keep, although we would probably have some subtle changes, because I do see, regardless which party gets elected, I do see a big infrastructure project build that hopefully would get approved sometime in 2021, which would ultimately help the economy. But let's talk about the economy in 2021, but let's also talk about the economy the next 3 to 5 years. This is what I see. We've got a lot of pent-up demand in the U.S. economy and really the world because of this COVID virus. What's going to happen is that pent-up demand is going to get unleashed. When it gets unleashed, you're going to have a huge spring back of GDP and probably a GDP growth under normal circumstances would grow between 2.5% and 3%. I could easily see as we get into 2021, we have GDP growth that could be somewhere between really 5 and maybe as much as 8 to 9% GDP growth, which would be huge. So the economy is going to spring back. Ultimately, there's going to be sectors that will do better than others, and we're currently in those sectors that we feel are the most appropriate and growth-oriented for our current clients. Now remember, we're going to see a little volatility. The day before the election, the week after the election, regardless who gets in, we're going to see a little bit of this. It's going to be normal. Year to date, I'm happy to say I like where we're at, and I think our clients certainly like what we've done for them, again, year to date in your overall portfolios. But as I've always discussed, if you have any concerns at all, any questions, my staff and myself are always available. Give me a call in the office. Let's chit-chat a little bit. And as always, we need to do a review with you, if you haven't been in the last 6 months or 9 months, give us a call. Let's schedule a phone review. Let's schedule it in office. I like in office because I like to see my clients face-to-face if possible. And again, we want to make sure your questions always get answered. Make sure you have yourself a safe and profitable day.